Last month, we discussed the water and energy thirst of AI companies. Today, we find out how chips companies, including NVIDIA as an example, do on managing their human capital and water as well as energy demand. What are the most important issues and how should investors put them into context? Well, stay tuned to find out right now on UBS Trending. Hi everyone, welcome, and my colleague Sebastian, glad to have you virtually join me to continue a discussion today on AI and sustainability. Today we'll go deeper on this topic, and as everyone knows by now, I believe in CIO we see significant opportunities for investors in AI, including what we're calling the enabling layer of the technology, which includes semiconductor companies which make the chips that really power and enable all of this technological advancement. So Sebastian, start us off here. What are the sustainability factors which matter the most to the financial performance of these semiconductor companies?
Yeah, that's a great point, right? And I think last month you already discussed this with Michelle a little bit as well. In general, producing the chips that feed this whole growth around AI, they're very resource intensive to produce. Specifically, it requires a lot of water, right? It also pollutes quite a bit to actually produce these chips, so quite some CO2 emissions associated with it as well. And then as you're using so many of these precious materials, what we actually see is that this generates quite a lot of hazardous waste as well. Now, on top of that, of course, a very important part of this, as this is one of the areas that is growing so rapidly, a very important part of it is the innovation. And what that means is that people and the talent, the human capital behind all this innovation, right, and the competition that we see on intellectual capital, that is another huge part of the materiality for the semiconductor industry. And then lastly, of course, I mean, these are mostly a risk part, but of course we shouldn't forget about the opportunity set as well, which is what we look at through our products and services, where we see that AI, but also the chips specifically, right, are used in so many different solutions for a transition to a low carbon economy, that there is a huge opportunity side to this story as well.
Yeah, that's right. And I mean, ultimately, what we do in thinking about the sustainability part of investing is to identifying this kind of longer term and different ways of thinking about investment opportunities. And that table showed that for semi companies, it's all the environmental and human capital issues. Now, you maybe were kind of hinting at this, but of course, it's not all of these companies are the same. And as we wrote in the recent SI Perspectives report, there's two types of companies. Some are fabrication companies, which really manufacture the chips. And so those are the ones that are going to be more energy intensive, have higher risk of pollution, require the most water, versus what are called fabless chip companies, which really create that innovation and the design of the chips. And those, perhaps, they're the products and services used, as well as the human capital, being able to recruit and retain safely the talent that they need to build and design are the sustainability issues that investors should pay more close attention to. Can you actually give us an example of the fabless versus manufacturing names to make it real for us?
Yeah, so I think the two names probably on the top of anyone's list when we talk about this industry, right, are of course NVIDIA and then Taiwan Semiconductor Manufacturing Company, TSMC for short. TSMC is a traditional manufacturer, right, producing actually the chips, whereas NVIDIA is more on the design side. And we really see this reflected in the overall consumption of water and also the emissions of carbon of these companies. So for example, TSMC, to generate $1 million of revenue, they emit about 170 tons of CO2, which is on average with about the rest of the benchmark. So it's not particularly high or particularly low. But if we compare it to, for example, NVIDIA, to generate the same amount of revenue, they only emit 5 tons of CO2. Now, how much does that really mean, right? 170 tons of CO2, it's hard to put into context. Generally, what we see, or if we convert it using the EPA as a reference, is that 170 tons of CO2 is comparable to about the emissions associated with 20 residential homes in the US for about a year. So of course, TSMC generates a lot more than just $1 million in revenue. So we have to multiply that with the total revenue that they generate. But we see the same story on the water consumption side, where to generate $1 million of revenue, TSMC consumes about 440 cubic meters of water compared to a much, much lower number, I believe around 10, 15 cubic meters of water for NVIDIA.
Yeah, and what's interesting here, and why are we talking about these two names? Of course, it's not a recommendation. These are just examples of some of the names that are top of mind here to show to our audience that there are differences in how the different kinds of companies are extracting kind of water from the environment to produce what we need, as well as are demanding energy. Now, of course, what also matters is down the value chain. So once the chips are produced and they're used by other companies in actually powering kind of the technology, then there's additional energy demand, which was that story that Michelle and I discussed a month ago. With NVIDIA as an example, what's interesting here is we're always asked, well, are these companies sustainable? How are they doing? And looking at NVIDIA, if we look across 3 data providers on sustainability, MSCI, Sustainalytics, as well as our own CIO sustainability scores, we notice that it ranks relatively high compared to its peers, in the top, call it 1 or 3 percentiles in terms of how it's managing its human capital and its demand. Now, why does it matter? Again, not about a single name. What this means is that if you have a focus on sustainability as well as want to take advantage of this opportunity, you have enough opportunity there to look for companies that are relative leaders and don't just need to kind of go about it without looking at this information. I think you've looked at the broader market as well. Sebastian, beyond the single names, what are we finding there?
Yeah, so in general, if we look at how the scores within the broader market are distributed, right? We looked at what is the overall scores for the full universe of companies that we look at, what does that look like, and then how does it compare to the semiconductor industry? So what we see on the chart that we have on the slide, of course, semiconductor industry is a relatively small part of the full universe that we're looking at. But overall, it actually scores quite well. This can be driven by many different parts. Of course, as mentioned, right, you have to do well on those topics that we believe are material to the semiconductor industry. What we see is those companies that are well positioned for the products and services side of things, but of course is also the companies that are managing those natural resources well. If you bring that together, we see you're getting towards the right tail of this curve, right? So towards the higher scores. What we're seeing is that overall, the semiconductor industry is skewed a little bit relative to the global universe, showing that overall, probably the semiconductor industry is looking at these material factors and looking at how they can manage those successfully and maybe better than their peers.
Yeah, quite an encouraging kind of result that we found there. And really, what's the ultimate takeaway for investors here? If you're looking to take advantage of this opportunity, number 1, consider the financially relevant sustainability topics that we looked at. Number 2, we expect that more sustainability-focused investors will be looking into this sector, as everyone is, but with this lens, and so they will be encouraging those leaders relative to their industries. And then number 3, we also expect additional engagement to focus here. We expect more proxy votes and more demands of these semi-companies, as well as everyone involved in the AI opportunity, to bring forward information around energy use, water use, human capital use, as well as the end kind of risks and opportunities of the technology to help unlock sustainability challenges. So that's the takeaway. And thank you so much, Sebastian, for joining me virtually for this. And thanks everyone for your time with us. Now, of course, for more information, visit us at ubs.com/views and make sure to follow UBS on social media, on LinkedIn, Facebook, Instagram, X, formerly known as Twitter, and also check out our Instagram channel at UBS Trending for UBS Studios content that you cannot find anywhere else. So as always, if you have any questions about your portfolio, please speak with an advisor. Until next time, I am Amantia Muhedini. Have a great rest of the day, and remember, keep your eyes on what's trending.